Hi, I'm Richard Schulman from Keller Williams Realty.
And I'm Todd Siebold from Surety Financial.
Today we're going to talk about pre-approving, why it's important, what it takes, and how long the pre-approval is good for. So Todd works at Surety Financial. They're a direct lender and a mortgage brokerage, so they do have access to their own funds to lend, as well as access to other banks to lend funds from. So Todd, let's talk about for a minute. What do you need from a borrower to do a pre-approval?
First and foremost, I want to stress the importance that how critical it is to get pre-approved before you start working with a realtor, so you know exactly what you qualify for. What we need initially is income information, which typically is your last 2 years W-2s. If you're self-employed, that would be your last 2 years tax returns, 2 months of your bank statements, and a month's worth of your current pay stubs.
Okay, and then how long does it take to do the pre-approval? If someone came to you right now with all that information, how long would it take for you to issue an approval letter?
About a half an hour. So you would sit down with us or talk to us over the phone. If you can email the information, we take your social security number, we take an application over the phone, we run your credit, look at your credit score, and can pretty much calculate your income within about 5 to 10 minutes.
Okay, that's fantastic. That's a lot better than I would have guessed, and I think a lot of people think it's a lot more difficult.
I think people think it's a lot arduous just because the banks are so behind and bogged down with given the foreclosures and other crises. So working with a boutique lender definitely has its advantages.
Very interesting. Okay, now a lot of people have a concern with running their credit. What is the impact to your credit score by having it run by a mortgage broker or a lender?
Very good question. The type of credit report that we run, that any bank runs when you're acquiring a mortgage, is a residential mortgage credit report, or an RMCR. When you pull your credit, your score drops a little bit, probably 5 to 10 points from what you would see on one of those watchyourcredit.com,
Okay.
Online things.
Mm-hmm.
When you're pulling a residential mortgage credit report, and it will not change no matter how many residential mortgage credit reports are run in a 45-day period. So you could come to Surety Financial, we run your credit. You could go to Wells Fargo the following day. You could go to Bank of America the day after that. You could go to any bank and have them run. So long as they're running a residential mortgage credit report, we will all get the same credit score and the same information.
Okay, that's good. And does that 5 to 10 points recover after a certain period of time?
It does. If you're not given a mortgage after 45 days, then your score will go back to where it was before.
Okay, and then that score drop is not going to affect your ability to borrow funds?
No, as we try to, inform our borrowers, your credit score is what we see. So it's important that you allow the lender to pull your credit, because most of the challenges that we face are credit related, and our job is to advise you on how to hopefully fix some of the challenges if you have any challenged credit, and to work within the framework of your credit report.
Gotcha. Okay, very interesting. Now, another concern that I hear from people is that they don't want to do a pre-approval because they'll be looking in 3 months, 6 months, a year. Now, you and I both think that getting a pre-approval is a great way to start because it can help you to address problems that may show up in the credit report. If you're self-employed, it can help the lenders develop a better loan package for you. How long is the approval good for, and what would happen in the future 6 months from now to their approval?
The pre-approval is good as long as the credit report is good for, which is 90 days. So a credit report is good for 90 days, standard industry-wide. And so long as the conditions of what you've provided to us, meaning your job, what you have in the bank, is effectively the same. So they are conditional approval letters. If the conditions have changed, then therefore the pre-approval has changed. But you ask a really important question, which is why, if I'm not planning on buying a home in a year, should I pre-approve now? One is because it's an ever-changing credit market, and it's really important for you to work with your lender partner, your realtor partner, to understand the changes to what's going on in the housing market and what's going on in the credit market. So whether or not you may think it's going to take you a year to buy, when in fact you can buy in as little as 3 to 6 months, just based upon having the conversation with the lender. Again, if an opportunity were to arise and you found your dream home with Richard, and you were 6 months into the 6 months into working with Richard, even though you weren't going to buy for a year, we pre-approve you at that time, and there's a blemish on your credit report, say a trade line or a credit card that wasn't yours, that can take 30, 60, 90 days for us to repair for you, and you may lose that opportunity. So it's really, really important to start with your lender and work with your realtor as a partnership, the three of them working together, to achieve your goals.
Okay, great. Thanks for all the info about pre-approving. You can contact either one of us. Our information is at the bottom of the screen, and we can talk to you more about the pre-approval process. And of course, Todd can actually go ahead and pre-approve you. Thank you very much.